Good morning, traders and investors. Today is January 7th. It's a Thursday. It's the fourth day of 2021, fourth trading day of 2021. I've got a lot to talk about. Boy, oh boy, what a day yesterday. But look at the markets. Markets are strong. They're shrugging off any downside. They're actually looking forward to a bunch of good stuff happening, which is what I want to talk about today. But first, I want to talk about something important. We got a jobless claims report coming out in about 3 minutes. And let me just go through this real quick with you because I'll circle back to it before we're done today. Consensus is 803,000. I'm expecting this number to jump. If this number jumps higher, it's not going to be bad for the economy, and it's going to prove to us that COVID is actually having a bigger impact on the GDP than we expected. Look at the estimate, the employment report that came out yesterday. We were negative 123,000 estimate and the consensus, and it wasn't a good number. It was not a good number. So I want to see where we are right now on jobless claims, and we'll revisit that in about a few minutes. Let me just start off with the global markets and take you from there, because we've had a lot to talk about. A lot of things happened over the last 24 hours. Global shares, they rose Thursday, as you could see, pre-opening right here. After Congress certified Joe Biden Electoral College victory following unprecedented chaos when supporters of President Trump ran rampant through the U.S. Capitol and achieved absolutely nothing except violence. Come on, what are we doing, folks? This is, let's be real here. The formal recognition of Biden as president-elect on Thursday has raised expectations. His administration helped control both the houses of Congress will push ahead in more generous support for the U.S. economy. Oh, that's happening. And by the way, all those stocks that I've been pestering you guys about, electric car, evergreen energy, pot stocks, oh yeah. Remember small caps? Made all-time highs yesterday. It's going to be a good stock market. Well, we have to be focused on the right sector. It's not going to be a broad market. It's going to be focused on very specific sectors, and it's not going to be the FANG stocks anymore. Investors expect Democratic control of both houses of Congress after Democrats won two runoff senator elections in Georgia, has raised the potential for increased spending on infrastructure and more aggressive action to fight the pandemic. We may have a close down, folks. We got Dems in the White House. We may have a serious 90-day lockdown. And remember, healthy people still don't have access to the COVID medication vaccine. And jobless claims are running nuts. So while some sectors may be doing really well, some sectors like airlines, cruise ships, those type of going back out companies may not be doing well. We may see exactly a similar environment to what we saw in March, April, and May of last year. I could finally say it now. Russell 2000 index of small caps surged 4%, record high, as I predicted. Another round of stimulus for the economy could benefit smaller companies in particular because they tend to have smaller financial cushions to survive the longer downturn, and because there's not going to be a massive, nasty, unneeded... don't even get me started. Folks, trade war. Remember, when did the small caps start lagging? When Trump announced the trade war. Do you really think Biden is going to be as tough as Trump on China, even if he says he will? Come on, let's be real here. It's not going to happen. This word trade war, all of this stuff, it's in the past. Small caps started rallying and outperforming the large caps, the FANG stocks, the day after the first debate. And I've been saying that since the first debate. So this shouldn't be a surprise to anyone. And I don't want to say I told you so about a million times, but I did. This should be no surprise. Now, a much worse than expected job report on Wednesday underscored the fragility, that's right, fragility of the U.S. economy due to worsening pandemic. Payroll processor ADP, which we just looked at, said private employers cut 123,000 more jobs last month than they added. And that's a private report. We're about to see a public report, the federal report, the weakest such report since April. Folks, again, I hate to say I told you so, but if you think we're going to avoid what we had last March, April, and May, let me sell you some ice while we're in Alaska. The Labor Department's more comprehensive report is out on Friday, but we have the jobless claims right now. Big spending plans for the economy will trigger, not could trigger, will trigger stronger growth for the economy in the future, but at a heavier borrowing for the U.S. government and maybe even inflation. These factors help push Treasury yield, the yield over the 10-year note, up 106 from 104 Wednesday, having surpassed 1% for the first time since March. And I'll look at Treasuries in a minute. Democratic control of Washington could also lead to higher tax rate for businesses. I am expecting that to happen. Meanwhile, energy prices are higher. Oh boy, now let's look at the number. Let's look at that. Drone roll. Let's look at what the claims are. Please go down. Not good. Better than expected. Consensus 803,000 were better than expected. But look at this. 787,000 new jobless claims. This is very close to the numbers that we saw during the, during the winter fall of last year. So this is not bad. This is like the same type of numbers we saw in April, May. This is telling us that things are going to get worse before getting better. Now, if I was a betting man, I would be looking at the Russell 2000. Let me show you why. So here's the deal. Russell's made an all-time high yesterday. Now, if you look at individual sectors, now 5 months ago, 6 months ago, 3 months ago, and 2 months ago, and 1 month ago, and about a week ago, what did I tell you would be the best sector? Basic materials. Basic materials. The highest sector, we have all the S&P sectors. Basic materials is leading, and I'm not trusting financial because it still hasn't traded above the March of 2020 highs, while industrial and basic materials have. So we look at stocks in the basic materials sector. Lin Media, Air Products, Sherwin-Williams, a stock that I recommended about 6 months ago, Ecolab. These are good stocks, and these are the stocks you should be looking at right now. Let's go through a few of them. Let me just go to bar chart. I don't know how I got on a photo site. Let's see. Lin. Let's look at Lin. Strong buy, making recent highs. I like this stock. How about APD? Let's take a look at APD. Remember, if the stock didn't take out last March high, not interested. Nope, not interested in this one at all. It's lagging behind. Nope, don't like it. Let's look at Sherwin-Williams. I like Sherwin-Williams. I recommended this stock like literally months ago. Let's see how it's been doing. It's been doing pretty good. Still a buy, but I wouldn't be buying it right now. How about Ecolab? Ecolab should be doing well. Remember, people are getting tested right now in medical labs all over the place. Yeah, Ecolab is doing well. So these are the best ones right here. Let's look at Newmont. Has been lagging behind, but moving up. But here's the one that I've been talking about nonstop, FCX, and let me show you why I've been talking about it. These are the 500 S&P stocks. Let's look at the strongest stock, FCX. And is this the first time you're hearing about this stock? No. This is the strongest stock right now. Out of all of these stocks, the ones that I really like are Albemarle, basic material stock, largest lithium producer in the world, and Freeport-McMoRan, also a copper stock. Why copper stocks and why lithium stocks? Well, remember, Biden is now president. Biden is going to announce a $1 trillion infrastructure deal. When you're dealing with infrastructure, and it's going to be an evergreen renewable energy infrastructure, what do you need? Basic materials. And you need stocks like copper stocks to make infrastructure, and you need stocks like lithium stocks for renewable energy. Now, let me show you something interesting. I told you about a sector that I really like, the renewable energy sector. Look at this sector, up 5%. I want you to see how evergreens are doing right now. Look at that. Solar sectors, look at that. How about pot stocks? Look at that. This is telling us that people are going to focus on the type of stocks I've been talking about. Renewable energy, pot stocks, lithium battery stocks, focus on the things that Biden is focused on. So I think you have a good little roadmap here. Now, let's keep an eye on the employment data because tomorrow's report is going to solidify the ADP claim, and that may put a little damper on the market. But I think the biggest risk we have now is Biden closing things down and seeing a big spike in stay-at-home stocks and seeing a cool-off in non-stay-at-home stocks, which is exactly what happened last March, April, and May. We may be seeing that again. So I wouldn't be buying airline stocks. I wouldn't be buying cruise ship stocks. I wouldn't be buying stocks that make money on going out like Disneyland. I would be very cautious on that. I would focus again on stay-at-home stocks, and I would be focused on basic material stocks. Speaking of stay-at-home stocks, let's see how Zoom is doing. I haven't looked at it in a while. Yeah, it's down. It's up today, but it's not rallying. So maybe not, but basic materials for sure. Let's look at Plug. That's Plug Power. That's one of the evergreen stocks I've been talking about. Look at that, 20%. 20%. How about NEO? I've been talking about that stock for quite some time. Look at that, up 5%. Yeah. So again, renewable energy stocks, self-driving car stocks, basic material stocks, pot stocks. That's where you want to focus on right now. Now, before I go, I've got something important for you. 10-time heavyweight trading champion Chuck Hughes just revealed a strategy that allows him to bank $3.5 million in documented profits over the past 7 years. That's $500,000 a year. Not bad, right? Just over the last 7 years. This guy's been doing this since '85. For a limited time, we're giving you the chance to test drive this strategy for yourself. Now, who wouldn't want that? We're talking about a 95% success rate, all right? Like out of 23 trades, 1 loser. We're talking about some really good numbers. You see, Chuck agreed to sit down for an exclusive interview with me. And during our discussion, he showed me how his trophy trade system had allowed him to make consistent gains year after year completely stress-free. Folks, I mean stress-free. Chuck looks like he's kicking back, playing tennis with his wife, traveling to Australia, going to visit his 2 houses in Maui. He lives the life. I mean, I've seen Chuck's life. This guy, he's neighbors with Clint Eastwood. You got to check this out. This interview is very cool. Click the link below, watch this interview today, and find out how trophy trades can completely transform your returns and your life. Do it now. Start the year on the right tracks. Take advantage of these moves we're seeing right now. And have an amazing day. And leave some feedback for me. Leave some questions and I'll cover them in the next videos. I want to hear from you guys. I don't want to be lonely out here all by myself doing this to thousands of people. Reach out to me. Say hello. Bye, everyone. Have a great day.